I want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. How do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you are committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. You know, holding Bitcoin, what do you think you could do? What do you think you could achieve here? Now we know historically the average return of Bitcoin, yearly return of Bitcoin is something around 200%. Right? But that's including when price started going from a penny and then to $1. You know, what happens if you take out and use from 2012 to today? I think the average rate of return annually is something closer to about 120%. I would like to see that. I would like to know actually. Take a look at some of these numbers. This just happens to be the first choice on DuckDuckGo for Bitcoin average yearly return. And it's 2017, 1300, 2020, 300, 2019, 87, and 2018, 72. These two cancel each other out. You're looking over 4 years, 1600 divided by 4. You're looking at 400% a year. There you go. Mean annual return, 400%. Absolutely astonishing. I mean, and then I went over here and looked at this Reddit thread, and they're showing the percent change for every year into Bitcoin. It's a couple of down years. 2022, right? Good chance it's a down year as well. You know, that's what I'm expecting. Not being invested, you know, whether that's worth it to you during these bear market years, it could have a significant change in your overall accumulation. That's for some more advanced stuff. So you can see, even if we did experience something like drastically diminishing returns, you know, instead of 400% over the last 4 years, maybe we're looking something forward at like 200%. But even if we only get 70%, what happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000. And growing your account to $46,000. That's only over a 5-year period. But it's also with a 30% return. I think, I personally expect over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return annually in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. That $2 million is comfortable. You could basically buy whatever you want, whenever you need it. You know, really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today with $3,000, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, you know, it's every 210,000 blocks. Next one, you know, estimated 2024, 2028, 2032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. And now you're looking Total deposits over those 12 years, $39,000, $3,000 a year. You're committing to this plan, to your investment plan. And then you're looking at, $5 million if we hit our expected 70%. Anything can happen. Understand your risk and what your risk is before you make any investment. And do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if there was just an 85% annual return in Bitcoin over the next 12 years, you would be looking at something, $15 million. That's, from here on up, you go on, borderline ridiculous for a 12-year plan. 70%, 12 years, next 3 halvings, you're starting today, $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments. And that's why it's important to focus on this formula. It'll help give you the proper perspective of what it is you're looking to achieve for a longer term. And it's going to help give you the discipline you need to stick to the plan, because execution is everything. Let's start this off. I like to look at Bitcoin from many different vantage points, many different angles, many different views. One of them is lining Bitcoin up from price from exactly 4 years prior. Now, of course, these things don't match exactly to the day. They're actually off by a couple of weeks. But you can see when we have the cycle peak, 4 years earlier, the cycle peak again. The bear market low 4 years earlier, you could see it's well into place once again. You could see currently where we are today. You can see as we're in that mid-cycle near that low, it was 4 years earlier today. What happens approximately 150 days from now, this December 2021, are we looking at, as 4 years earlier, a cycle peak or close to it? And will we be seeing in 2022 the bear market low? Will that just be 4 years later? That's the 4-year cycle. You're not expecting for things to repeat exactly, but there is a distinct pattern that anyone could see. You have to not only look at it from this angle, but from many different vantage points, including yearly lows. It's very clear to anyone looking that all of these yearly lows, normally put in, by the way, in December or January. It's happened every year but 2015. There are many anomalies that occur in Bitcoin where the model breaks. The model broke recently back in March 2020. During the dollar liquidity crisis, when the world went on lockdown during the COVID crisis. And you could see the Fed's response ever since, as the Fed's balance sheet was expanded by $4.1 trillion March 2020. And it wasn't just the Fed. The Fed didn't act alone. The ECB continues massive amounts of quantitative easing monthly purchases. $120 billion coming monthly from the Fed, $1.4 trillion a year. The ECB is matching that. Altogether, the G10, $320 billion of monthly QE purchases. That is signal over there. That's why Bitcoin this cycle is performing so well. Let's take a look at it. Let's take a look at it from many different vantage points, including this one. This is one that really helped us early on. It's the halving tracker on Twitter. Bitstein himself lining up from the halving event, right? The most important event in Bitcoin's 4-year cycle is that every 4 years, the miner's reward is cut in half. Every 210,000 blocks. And you could see by lining it off from the halving, you could see distinct cycles. The one that I'm looking at right now with the mouse and going over in purple is the 2012 Bitcoin cycle. The bull market occurred in 2013, 1 year later. Right? And you can see some things that are distinct about each and every one of these cycles, lining them up like this. You could see again in this dark green, the 2016 cycle, the 2017 bull market. It matches previous cycle 2012. Very, very similar, almost eerily similar. This one again, you could see that it resembles the prior two cycles. How do you mean? Well, if I look at this current cycle in this light blue, I see that it's an exact mirror image of an average of these two cycles. What do you mean by that? Well, this current cycle is outperforming the 2016 cycle. right? But it was underperforming the 2012 cycle. On the upside, it was an average of the two. On the downside, we had a 53% drawdown over here, right? A 39% drawdown here and a 70% drawdown over here. Again, it's an average of the previous two cycles in not only volatility to the upside, but also to the downside. And then you look at the consolidation that took place in this first cycle of, approximately 6 months, very long, ending in capitulation. The previous cycle before us, same thing. It wasn't that long. There was one there. It ended in capitulation. It was obviously massively less than this one to the downside, 39% drawdown instead of a 70% drawdown. Big difference, right? But coming out, they both look very similar. Those last 150 days from that cycle low, that capitulation low, into that cycle peak, these things line up and look very similar. Taking approximately 150 days each cycle, right? If you think the cycle low is in right now we didn't have a capitulation over here as we did in the prior cycles, but we did see a rounding 2-month consolidation, a bottom patterning forming, right? Price breaking out of the descending wedge towards the most important trend line in crypto. What is the most important trend line in crypto? And here you can see clearly the white cycle being the current cycle, 2020 cycle. This yellow dotted line is the most important trend line in crypto because when it breaks to the upside, so will all of crypto. Now you're going to see Bitcoin, the rising tide that lifts all boats. It's what's going to bring on the second alt season. It's going to bring on the climax peaks of the bull market. We're going to see euphoria. We're going to see the mania stage. We're going to see intense emotions and psychological factors come into play. And not only from the retail investor, but from the institutional investor, from the large fund to the family office to the nation state, public companies. We're about to see some massive FOMO take place until eventually there's no buyer. Right? There's going to be a last whoever who buys over here towards the top. And then you're going to see just all of a sudden no bid, price come off. 2022 bear market of Bitcoin, roughly 85% drawdown from the top all-time high. Where are we right now? We are waiting. We don't know when it's going to happen. We can't predict the future. There's no way we could do it, right? We don't know if this happens today, tomorrow, or into September. We have no idea, but we do have past cycles, just consulting past price behavior to see what price did around this particular time of its previous cycles. And it gives us some type of awareness of where we are for this current cycle. And funny enough, you could see price coming out of what seems seemingly the mid-cycle low, and it's coming out sharply as it did in the 2013, as in the 2012 cycle, and as it did in 2017 in the 2016 cycle. You can see that sharp move up once again. We will see. We have the clarity we're waiting and looking for once price breaks the most important trend line in crypto to the upside. Then we know we're looking at that move towards that potential blow off top and cycle peak. And we're going to be looking to see where the very top of that is. We have our range. It continues to update as more data is presented, including when the mid-cycle low was. It wasn't until the mid-cycle low, until we break the most important trend line in crypto, that we could say with a high degree of confidence that yes, the mid-cycle low is now in. Right? That's going to help a lot of traders manage their risk as they look to take a position for this coming potential move. We've done it before. It's time to do it again. Everyone be aware of what's going on. But there's many ways to look at it, right? Including this one. Long term, you just want to know when to accumulate and when to sell, take profits on Bitcoin. You could just follow a model from afar, like we have here with the true trend, showing when price is oversold is a time that you want to be accumulating Bitcoin. You're looking at that cycle low, approximately every 4 years. And then every 4 years, you have the cycle peaks. There's a clear model for it. It's easy to do. Do you remember when I showed you, by the way, how these two these past cycles coming out from their mid-cycle low, how they moved? And if we're potentially looking at, again, this one over here, this one's very steep. It's vertical. The 2016 has a much, easier slope. And just take a look at what that looks like just looking at 2016. This is right here, the 2017 December blow off top, the 2016 cycle. And you could see how price is rising on a linear scale almost vertically. It is vertical. So a lot of people, if they don't have the awareness that we have, they're going to make some poor decisions because they're going to have a lot of emotions running away. Either that price is getting away from me and I didn't get enough Bitcoin, or I didn't position correctly into Bitcoin because I thought I had time at the right time, right? And then when it was at the right time, I didn't take advantage of that opportunity. So now, what do I do? Am I buying in much higher? Or what happens if I give it just, a couple 100% more and then I'm buying in a couple 100% higher? It's going to happen. And a lot of traders are not going to understand, and they're going to be buying that very top. They're going to be buying that very top because they're not going to understand what is happening, as we will and are. And not only that, you're so far from a deviation that it makes sense to go ahead and take a lot off the table. Positioning back in at the appropriate time, but doing that because of the 4-year cycle, and then taking that further with not only our trading psychology, understanding of the psychological behavior behind the different market participants, but the technical analysis. Jordan, focus on the charts, right? Our greatest asset, the technical analysis to help us understand these price movements. The year of the bull, Bitcoin has an average compounded annual growth rate of more than 200% a year over the past 10 years. What do you think the likely compounded annual growth rate will be for Bitcoin over the next 10 years? Inspired by the opening of this very video. The plan that everyone should have in place. If you're listening to this now and you don't have the plan that I laid out to you, the first 5 minutes of this video, then you need to watch that again. By the way, I watch it every day. And I'm executing on my plan, and I've been ever since I laid it out with all of you, right? I could now see an 85% drawdown in Bitcoin, and I would still be in higher than my average buy-in price, right? And you could do the same going forward. It's a question of understanding the trade, the why, the risk, and then time. And you have to put in that time. But you can't put in the time if you don't understand why and what is going on around you. You will get caught up in the emotions. The results, I voted over here between 100 and 200%. I do believe that, 22% people think that it was going to be over 200% still. And then you had, roughly the same 18% saying that they think it'll fall below 100. We did the math for 70%. Right. The math that I showed you starting today with $3,000 every year committing, right, to invest another $3,000, $250 a month. We did the math for 70%. I think it's going to be between 100 and 200%. I also think that the first 5 years, these next 5 years, are going to see, a larger portion of those gains. And the later part, I think there's a chance of seeing diminishing returns towards the later part of the decade. That's how the adoption curve seems to look and work. And as we reach, this is early adoption, right? We're still in the very early stages of growth. But that will be different after just 10 years from now. It'll be different after the next 2 halvings. It'll be different after the next halving. Yes, Dude McTroll, absolutely. If you group the halvings into 3s, the first impulse is the strongest. And then the next 2 get progressively weaker. The next 2 halvings will likely also have a smaller returns, than this run. But this run, it also could definitely outperform the 2017 bull run. We looked at that earlier, saying if where we are right now in light blue would actually come above the green over here, inside of that, outperforming it, or maybe even outperform the 2013 run. Crossing your fingers. Yeah, obviously that's not the base case that price would outperform the 2013 cycle, that we would see the upper end of these ranges over here, price, above $400,000, $500,000 and rising towards not only $750,000, you could see the model allocating for much higher prices. The published model, even more, right? This is over here, CTM, the meta model, and you could see that the deviations to the upside potentially could be rather high. And a lot of people, they might be thinking that we are receiving a super cycle or it's a super cycle. Why it could be well within the realm of past price behavior, right? Now, there's a sweet spot, that's for sure. There's something that would be underperforming, and there's quite a room for deviation to the downside for this to really be outperforming $120,000. I hope so. The math that I did from the very beginning, $140,000 is mission accomplished. I had to update during this cycle as presented with new information, as not after the halving. Again, the global response to the crisis, the extraordinary amount of liquidity in the system, it's contributed to a stronger cycle. And how strong it ends, over the next 5 months or so, we don't know. But we're watching from all different vantage points. I expect strongly, because of looking at where the Fed is right now. Listen, it's a fluid situation. So it looks like it looks to us. When I say us, here's Ian's model. So beautiful, right? Notice over here this like where it's really dark. This is the 2012 and the 2016 lined off the mid-cycle low, right? And if that's what we just looked at, the mid-cycle low in Bitcoin, is this, a potential path to where price is headed and then peaking? So this cycle is looked at from many different viewpoints. Raul lining this up, taking a look at the 2012 cycle in blue, right? 2012, 2013 portion of that 4-year cycle. And he's saying that, wow, the current Bitcoin price really resembles that, very closely, including having this had a blow off top double wave. And our current cycle had not a blow off top. It had a 3-month rounding top. And then both of them, putting in that mid-cycle low, did it not have a capitulation low, but this time a 2-month rounding bottom low. We'll see. We'll know more once we break through the most important trend line in crypto. Then we'll have that clarity that the bottom's in, and then we'll be looking at how closely this mirrors this coming in to the close, the cycle peak. It's our belief, estimation that what we're looking at is Bitcoin mirroring more now, not the 2013 area or portion of the cycle, but more towards that bull market of 2017, outperforming it, but tracking it pretty closely, more than at this point reverting towards that 2013 bull market top. Now, if the 2013 trajectory takes place, and there's not much of a difference when you line them up like this, there was a big difference in total return. They look pretty closely matching each other scaled. And we're going to see that again. That's the base case, and that we see it outperforming the blue line, right, within this green area towards the peak. Now, that could change. If the low is not in and price goes ahead and makes a lower low, perhaps even putting in a capitulation like you saw in 2017, right? The low of the mid-cycle in both those cases was put in with a capitulation event. Yeah, maybe price, over the next week or two, actually comes off and then puts in a lower low, and then we see that type of behavior. I mean, and if that's happening, we then have to line this up again, adjusting to whatever that mid-cycle low is. That's how the model works when presented with new data, right? Once we know when the halving is. Once price eventually makes the all-time high of the previous cycle, that's a new data point for us to line things up for. We could always line them up off cycle lows, line them up from the bottom together, and we could also line them up from their mid-cycle low. By lining them up from their mid-cycle low, we believe that gives us the greatest accuracy going forward into the bull market peak, the cycle peak of Bitcoin. Now, we're going to have other points as well, including when the bear market begins, that cycle peak, as well as what the bear market low is. We'll be tracking those things in the future. Right now, we're focused on what's in front of us, and that's Bitcoin mid-cycle. In every way we look at Bitcoin, we've been very consistent and clear that Bitcoin has been mid-cycle. Every indication that we look at it from many different angles, many different vantage points. and we watch it. Here's Bitcoin on the 3-day. Here's that descending triangle that we were tracking, the breakout, and talking about well before this unfolded, what the move would be into the most important trend line in crypto. This is the place that the bears will have the opportunity to go ahead and attack. If you're bearish on Bitcoin and looking to sell Bitcoin because you believe that it has entered a bear market and will be trending down lower, this is your line of, if you're selling, that's your support. And you know how to manage your risk very easily and clearly. The break of this trend line, that would be what ignites the next move and leg down for the bears. Above this trend line, however, that opens up the bullish case for Bitcoin. Above that line, we are looking at Bitcoin not only extending out with momentum. Right now, things remain unclear until we break above the most important trend line in crypto. Right? But upon breaking above it to the outside, momentum has returned, and it should be relatively quick amount of time until price not only tests but reaches new all-time highs. And I don't know if this angle currently holds or not, because price has only traded for like 48 hours. There's a chance that we might be looking at lowering this down a little bit. You know, I have no idea what it's going to look like. We need to give it a little bit of time as this continues to develop. But the next area that we're watching, that I'm watching, is into that trend line to see whether or not this is where the sellers, the bears, they put up a let, are able to go ahead and challenge those yearly lows, and not only challenge them, but maybe even take them out, making another leg down. That's not my base case. I don't think that happens. Once we broke out of that descending wedge, it was pretty clear the next thing that happens was the test of the most important trend line in crypto. And the expectation is that's going to break. Whether or not that breaks quickly or there's a couple of tests of it, well, that remains to be seen. We do not know. It changes lives. It changes lives understanding why Bitcoin is the most important trade that matters. What's the risk? What's the potential return? Why there's no alternative? Understanding the current monetary system, the fractional reserve monetary system, the central banking fractional reserve monetary system that we live under, and why it is the cause of inequality, right? What you could do to protect yourself, what that looks like going forward, right? What's going to happen to the dollar? Is the dollar going to be replaced by the yuan? Is the dollar going to devalue rapidly? Are we going to see hyperinflation in the U.S.? Yeah. What is the end game here as MMT is being not only explored, but being implemented? Mic check, mic check. What's going on, everybody? Good morning. Good. Let me take a sip of water here as we get going. How about that analysis over there? Could you smash the like button if you learned something new today? If you enjoyed what is being presented, the clarity, mid-cycle right now in Bitcoin, there's been a lot of fear in the markets. Let me go ahead and jump back. By the way, I love being in the chat with y'all this morning. I really like being able to interact with you as the material's being presented. It brings a whole new flavor. I really love the direction that this is going, continuing to improve. It's the whole growth mindset right there from the very beginning, right? CTM all day long. What is it, right? Conquering the markets, trading and investing. What's that all about, right? Well, if you want to just get serious about that, which we are and which we do, you got to get serious about yourself. You have to master thyself, right? How do you do that? For me, it's on my knees. You're going to learn, you're going to figure out. It's all different aspects of life. It's working constantly to be a better person. We cover that from the very beginning, right? Reaching your goals of financial freedom. That's what it's all about. That's what it was all about for me when I began my journey. And that journey began a long decades ago. All right, listen, I want to focus today right now with you all in this area over here. This is the 213 cycle. These aren't lined up necessarily in any particular way. I'm just presenting them to you like a painter on a canvas, right? It's been interesting over these last couple of months being able to see me paint a picture in my mind that others couldn't see and is now seemingly coming to fruition, right? A lot of people over the last even couple of days things have clicked, and all of a sudden they are able to see the matrix a little bit clearer, and they're like, oh, that's what he was talking about. I could see it now for myself. I want you to focus on the 2013 portion of the 2012 cycle right over here in this area. This was after that first cycle wave. This bull market had two waves, wave 1 and wave 2, right? After peaking, price went into what? A correction, right? This is conquering the markets all day long. We look at this across markets and we pick our spots and we're able to manage our risk off it exceptionally, right? Some people waiting for price to make new all-time highs before they get involved into something. And that's a good entry. It's an okay entry, but you missed half of the run. Look where my mouse is. Look at the crosshairs. Look at the cycle peak and look where it breaks out of the mid-cycle dip of the correction, right? That's halfway. What about 2000? All right, let's move forward. Let's move over here to this area and focus in what happened in 2017 on the 2016 bull market run. Same thing over here. You had a nice correction in this area. Now, it didn't last as long as this one, but also like it didn't peak out. It didn't have a blow off top either. It was much more controlled. And after consolidating, you can see that it broke out. Now, from over here, the new all-time high, right? Quite significant difference. I'd say that's about a 4.5 to 1, a 4 to 1 risk to reward ratio, right? Where are we right now? Let's take a look further. You know, you could see after putting in that first mid-cycle wave, you know, right before the mid-cycle approach, putting in that first wave, it's higher than the previous cycle, right? It's not as high as the first cycle, but the volatility upside is stronger. Why is it stronger? Right? Uber easy monetary conditions. There's a bunch of money out there. Liquidity is through the roof, right? What happened when the liquidity was tight? March 2020, Bitcoin traded off 63%. You remember? All right. So what are we looking at next? Let's bring this forward. You know, by the way, in each of these instances, price did break out, come back and retest, and then resume off. It happened in 2013. It happened in 2017 as well. Again, this one's more pronounced. The volatility is greater. This one, it's more subdued. Nevertheless, there was, you know, an 8x from the breakout to the peak over here. There's an 8x return. It's significant, right? This is an 11x return from the breakout to the peak is an 11x. What are we expecting over here? Are we expecting, did I say, is that a 7x? I correct myself. Right? This was a 7x from the breakout to the cycle peak in the 2016 cycle, 2017 bull market run ending in December. 11% over here. Is this going to be an average of the two? Are we looking at something like a potential 9%, 8-9%? You know, I do believe so. This is the most important thing to be focused in on right now. The reason being, right? There's a big difference, but I'm going to show you right now so that it's clear for you and forever you're going to understand it. There's a big difference between where you get in. Let's look at it. Let's jump over here. Which chart should we be looking at? This one right here. Let's look at this one. If you take price at the new all-time high, $65,000, whenever that happens, right? And then you get, you know, let's call $350,000, you know, as the peak over here. That's a 463% return. Now, that's astonishing. To be able to do that and to be able to do that within a quarter or so, that's absolutely astonishing on its own, right? Now, what happens if you take the breakout though of the most important trend line in crypto? That return has improved drastically. What happens if you took it all the way down or were buying the dip? I bought 39,000 and I also bought again at 33,500. I was dollar cost averaging mid-cycle, Bitcoin off 50%. I wasn't trying to time it, but I made it, I let everyone know that I was buying the dip and why I was buying the dip. It's a significant difference. You know, if anyone who picked up Bitcoin around $33,000, you're looking at almost then a 10x into the potential cycle peak. Time is, look, you have to do your own research. You have to understand the risks. There are serious and sincere risks. Nothing is guaranteed, right? People say, listen, when I put out something like this and I say, look, the crypto markets are about to explode. Let's take a look at the most important trend line in crypto. Bitcoin's the rising tide that lifts all ships. astutely corrected by Year of the Bull, right? Who says, and he quotes me on it, is like Bitcoin's the rising tide that lifts all boats. Because most of the altcoins are boats. There's no question about that. There are a few ships out there. Either which way, Bitcoin is that rising tide that lifts all boats. And I'm gonna refer back to my boats. After making that distinction this one time, people are saying, look, that makes it like the results are not guaranteed. You make this look like and sound like that, like this is guaranteed to happen because you're so confident in it. And oh no, people have withstood 53% drawdowns this year in 2021, right? Many people withstood a 50. There's nothing easy about it. There's nothing guaranteed. I withstood an 84% drawdown myself. Now, with the capacity to withstand another 85% drawdown, and my average buy-in price would be higher if I had an 85% drawdown in Bitcoin. Right? And that's with half my net worth in it, including owned real estate. There are no guarantees. Make sure you're taking calculated risks. Make sure that you understand everything you're doing and why. Otherwise, how will you? By the way, I withstood that 63% drawdown in March 2020, right? Now, that was part, for me, of the overall 84% drawdown. But I withstood a 63% attack. I didn't sell my Bitcoin, right? I didn't get here to this position because it's easy or because I believe it's guaranteed. I ran the numbers. I understand finance. I understand the financial system. And I believe I'm making what I believe to be the most educated and calculated risk that I can take. And I'm not speculating out in other markets that I perceive to be less of a risk or more of a risk for a greater return. I'm concentrating all of my capital into what I believe to be the best trade, the most important trade that matters, right? Because if things go south, right? If today the FOMC, Jerome Powell, decides that, we're going to raise rates, right? If they just decide to do whatever they want, whenever they want, it's going to affect the whole financial system. It's not like that with Bitcoin. Right? It's coded monetary supply. We know exactly what the monetary policy is tomorrow, a decade out, and 100 years out, and so on and so forth. Right? This is where I'm putting my money. Look, price is approaching the most important trend line in crypto. This will help us understand when the mid-cycle low is in. Right? Once I have, or from my own analysis, I should say, right? Once we see price break, let's bring this off log chart, the most important trend line in crypto, right? At that point, I'm going to have higher confidence or high confidence that things are no longer unclear. Things have been unclear ever since that May 14th period, right? Things have been unclear. And once we break the most important trend line to the crypto, things are no longer unclear. They're a lot clearer. We have momentum with us. And I believe that the low is in for the mid-cycle. And then it's also going to be, shout out misconfig, the golden ratio, the golden fib ratio holding for Bitcoin for the third time in third cycle. I don't know. How many data points do you need before you believe something's a pattern and you're going to start front running it? For some people, 1 was not enough. For some people, 2 is not enough. For many people, 3 is not going to be enough if this holds when you come to the next cycle, because they're going to say it can't happen again. Either which way, once we break out most important trend line in crypto, at that point, I'm going to say, you know what? Things are no longer unclear. Nevertheless, we followed the first repair. On the day, June the 28th, as the first and only repair that CTM took, it was announced what was happening and noted that it is aggressive. When we entered this descending triangle, it was made known. And not only made known, it was made known that, listen, normally these things break out to the upside. If this thing does break out to the upside, most likely the next result is going to be a test of the most important trend line in crypto. It's unfolding exactly like that. Here we are, just bringing it up. And then we all know and we're all aware of what the bearish case for Bitcoin over here, they need to hold now, right? I talked about as we approach that descending triangle resistance, that it was the bears' turn to defend. The bears didn't defend it. right? And then you saw a lot of liquidations take place, and then you saw us catapult, right, as expected, into the most important trend line in crypto, right? So here we are again. It's the bear's turn to defend, right? And it could be anywhere in this range, right? But it's the bear's turn. If we break above here, right, will it be a retest? Will it be a breakout, retest, resumption? Or breakout, retest, resumption? Or will it be just a runaway? We don't know, right? We know in the past cycles, though, this thing did have actually retest. That's a breakout, retest right here, and a resumption off. And then we also had a further retest of it, I don't know how many days, 60 days later. Same thing over here. You had a big breakout or a retest and a resumption off, right? The resumption off, that's the safe trade. There's less of a risk in that trade failing than there is at any time before that. And that's coming back all the way down to the breakout of the descending triangle. That's also over here, the breakout of the first repair. That breakout, retest, resumption has the least amount of chance of failing. However, you could see how significantly the risk to reward changes depending on where you're entering that trade and why. And it's time to start running the numbers ahead of time. It's not the time, 2021, the financial system around us is falling apart. You need to make choices today that are going to benefit you tomorrow. So you have to actually you have to start putting in the time, and you have to start thinking about what you're doing, why you're doing it, and putting your money to work for you. I saw this on Twitter yesterday by Jesse. I saw this tweet over here he posted, and I follow Jesse all the time on Twitter. And he, immediately I thought of Brad's model. I went ahead and telegrammed Brad and was like, I'm looking at the model. Do you have an update of it? He's like, yeah, I have an update of it. I've been doing the same thing. I'm over here. I have to get the TradingView link so I could pull it up and show you because Brad's work's always so tight, right? I tried replicating it, but it's off. It's not exact. Brad's is exact over here. And this midline over here, if you haven't watched in the exit series on the CTM recommended playlist inside the Discord, if you haven't watched Brad's it's one of the best sessions we ever did. You have to watch it, and it gives such an edge coming into the latter part of the cycle here. As we're coming into this part of the cycle, it gives one of the greatest and clearest advantages. And here it is, similar over here, Jesse pointing it out. Brad's going to get me the link. And when I have the link, I'm going to share more about it with you. But we know that once we break the trend line here in the midline, how many days and how long it's taken in past cycles in order to see that cycle peak. It's been brought up by Scotty as well. We put it into the model, right? If you look at this yellow trend line, once you're breaking above that trend line, that's when everything's unfolding quickly. Brad's line is the midpoint, a little lower. There it is. Let's pull up the CTM model. You can see it right here. This yellow line over there, that's the midline right there. Ted's got it in. I'm going to highlight that right now, right? And you can see that price came up and towards that line, right? Mid-cycle. As we break above that line, who knows when it will be. It's going to be around the $100,000 resistance, that psychological resistance. You're also going to be seeing this trend line resistance coming in that same area, right? So what happens as price comes into that first time, we don't know, right? But as it breaks above, things are beginning to unfold quickly. That's the advantage. Let me go ahead and delete this. That's the advantage of having the CTM model over here, right? This is the advantage as we have the awareness all around us, right? So as these things are unfolding in real time and emotions are real, people are going to be FOMOing like crazy. Imagine Mike Tyson says everyone has a plan until they're punched in the face. What happens if you get punched in the face and you don't even have a plan? Are you the guy that he's like, everyone has a plan until they get punched in the face? You don't even have a plan and you're getting punched in the face, right? So anyway, where does that bring us? And where are we today? We got a lot to talk about tomorrow, including a really good note from Tom over here in a discussion where we talk about cycle top indicators. Take a look at everything that Alan Au has been doing and continues to do, providing the absolute fire, right? And some other things that we'll get into, but we're going to do it tomorrow. We're going to do it tomorrow. Let me play some honeymoon over here. See if there's anything else left to discuss. And then John, keep your guard up. There's no question about that. Why? Because nothing is guaranteed. Because nothing is guaranteed. There's no question about that. All right. This is Honeymoon Vocals on YouTube from Ziv Morin. Oh, that's what I wanted to share. Something maybe it's for, but Heath on Trade Talk. Make sure you're following all his continued work, and then we also have Brandon, Crypto Trades and Tech. Make sure that you're following Brandon's continued work. There we go, Brandon bringing it on Crypto Trades and Tech. CTM, absolutely outstanding stuff. An enormous thanks, right? We got Misconfig over here. We'll talk about that in another day for sure. The work that Ted, continues to contribute to the community. So grateful for his artistry, his work. By the way, this chart over here, right? This is what it's all about. We talk often about the pair, XAU, BTC, right? And how it's all about Bitcoin. I mean, this is the best meme I've ever seen. Look at this, and that's a trend. I'm pretty good at spotting trends, spotting them early, right? And I think all of you, not in all aspects of your life now, right? It's not CTM. It kind of like morphs into all aspects of your life in many different ways, right? And then also Ian, so grateful for all the work that you continue to contribute. Ian's model, absolute fire, coming into the close over here. See if I could bring it up really quick. There it is. Ian's model into the close over here. We're going to be relying strongly and closely on that. CTM all day long. Have a beautiful day, everyone. Thanks for making mine as such. All right, Luke, we got you. Let's take a look at the markets. Let me jump in. Boom, 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 boom. Bring it up, By the way, I shouldn't say obviously at all. We continue to see Bitcoin outperforming Ethereum. Let's pull up the chart and start with that chart. Ethereum versus Bitcoin, well within the range. We're coming towards the bottom support of the range over here. All right. We don't know which way this breaks, to the upside or to the downside. We have no idea. We know that last cycle, however, 4 years ago today, that Bitcoin broke down outside of a descending triangle. If you want to see it, I'll just zoom over to it really quick. It's important to be able to understand the relationships with these past cycles. It's the greatest edge you have in the crypto markets. And you could see in that area over here, the same thing. Now, the alt season, by the way, was much bigger. This alt season was much greater in 2017, the first alt season. Will the second alt season here in 2021 not be as great as the 2017 alt season? I don't know. I don't have the answers to those questions. From my perspective, from my vantage point, from my view, it appears to me that Bitcoin continues to grow in dominance. Now, if you take away stable coins and you take away, some of these crypto projects that will not be here within a few years, and it's just noise, it looks like to me that Bitcoin continues to grow in dominance. I think in about two or three cycles from now, that's going to start being really pronounced for a lot of people. If you go back just 4 years earlier, the question was which altcoin is going to become the next Bitcoin? Which is better than Bitcoin. And that's why you saw the massive first peak in the alt season, right? And then also in the second alt season, it was a huge peak. I don't know. I think we're gonna see a second peak of alt season. That's gonna be a beautiful indication that we're seeing the cycle peak in Bitcoin as well when everything continues to line up. 4 years ago today, this broke down eventually outside that descending triangle, right? Is that what's gonna happen again? Or are we gonna see, perhaps a bounce off of the support, a rejection here, and then I don't know, right? But if that happens, that's again symmetry between cycles, and that says to me, all right, well, it's pretty clear that Bitcoin's going to run against everything else. Now, the rest of crypto will be doing fine. It will be doing great. It will be in a bull market. It will be in alt season, right? Nevertheless, against Bitcoin, you should see Bitcoin showing some strength, and then that the alts have that blow off euphoric peak. That will mean that alt season is upon us. If we break out to the upside, that's saying to me that Ethereum it broke the model against Bitcoin. And what do I mean by that? If you zoom out, you could see that we have alt season 1, alt season 2, and they have lower peaks, right? And then you can see this current alt season peak is lower than this alt season peak. I expect the next alt season peak that we have, or December 2020, perhaps into January in the altcoins, and we're going to see a lower peak than we saw on this first alt season peak over here. The second one should be lower. If we break out here to the upside out of this triangle, let me just clean up my charts a little bit. Thank you guys for dealing with what goes on in my mind. And let me just try to illustrate that a little bit better for you. If we break out to the upside over here, well, then the model has broken. It has changed. And then what we're seeing from there, the market cap of Ethereum can wind up being bigger than Bitcoin. That's the first guess that I would make. Now, Ethereum is a whole nother subject and, obviously highly speculative, right? It's being built as we speak. It's not apples to apples. You can't compare it to Bitcoin in any way, shape, or form. So there we are. What else? We want to look at the markets. We should start with the dollar. Let me see what the dollar's doing. The dollar, this is nice. The dollar seeing, so far a retest of the neckline. What do I mean by that? We're looking at over here an inverse head and shoulders, right? You could see the left shoulder, the head, and then the right shoulder. Here's the neckline over here. Price is broken out and is coming in for the retest and is looking to resume off. It needs to make a higher high here for the resumption to take place, right? And I put in this line over here at 92, and I said, in order for this to be a failed breakout, we got to trade below that area. And then at that point, we would be looking for, price to come back down and trust these yearly lows down around that area. So the dollar could go either way, but definitely we have a breakout of an inverse head and shoulders taking place right now in process. FOMCs today, obviously that's going to have a big effect on what happens with the dollar going forward. It makes sense for it to be at such an important level here right now as the FOMC is meeting. And how could the dollar know where to go before it prices in that bit of information? I expect it to be a non-event. It seems there are a lot of people out there who think that anything the Fed has the potential to err hawkishly. I, on the other hand, think opposite. I think that, this is going to be a non-event, and I lean towards this being a dovish surprise. We'll see who's right in the end. What else are we looking at? The S&P, right off all-time highs. The Nasdaq rejected strongly over there, but that's testing like breakout retest. It's testing the breakout right there, right around 14,900. It looks extraordinarily healthy, right? Let's see how they react. I don't try to guess what happens. There's no trades up here, right? Well, if you're up, you're not trying to sell tops, so that's automatically out of the picture. By the way, if you stop trying to sell the equity markets, that's the first thing you could do to improve your chances of making money if you trade in equities. Stop trying to sell them, right? They go up. They keep going up. And you look at they're tracking the balance, the expansion of the central bank's balance sheets. And those continue to go up. They're not pulling money away. It's not as if the equity markets are really going up in relation to the Fed's balance sheet and the central bank's balance sheets, right? So stop trying to sell the markets. Will there be is there a time they're going to crash? Yeah, they crashed recently. It happened twice in my lifetime. They crashed back in 2008, September, October. I remember it very clearly, into November, December. December is when finally things turn around. I remember it so clearly. And then they crashed again in 2020, right? In March 2020. CTM, we were alive back then. We saw what was taking place. We positioned ourselves aggressively on the way down. I started, for the first time in like 12 years, I started selling S&Ps again. And I sold that, out of it. The most money I ever made in traditional markets were during both crises. It's very easy to trade in a crisis. It's extraordinarily easy, and things unfold fast. A lot of people, they don't like time. They don't like the time it takes to be a successful investor. They don't have the fortitude. Maybe they don't have the wisdom to have the fortitude. Right? They don't have the discipline and the dedication. In a crash like this, though, things are dropping and unfolding quickly. Of course, you have to deal with all sorts of emotions. But if you've been through it before, you know how it goes. And we crushed this to the downside. We crushed this inside safe haven currencies, the Swiss franc and Japanese yen. I did, and also against the commodity currencies. If it happens again, I assume that, I'm going to be on the right side of the trade again. But those happen, in my lifetime, it's happened twice. They don't happen too often. Stop looking for those events to unfold before they're unfolding, right? Wait for them to be unfolding and then get where on the right side when it matters. Until then, the right side has been up. If there's a correction in the equity markets, at that point, we'll be looking for the repair out of them and be looking to manage our risk out of them. That's the time to be looking to play them. That's the time to be positioning in. Right? But not up here at the top. You can't sell it. You don't want to sell it. And you can't buy it up here. So stand aside, sit aside, and wait for the next correction. When I said that in the beginning of the year, I said it in the beginning of the year, the strategy for 2021 on the equity markets is only after corrections. Right? S&P has not even given a correction big enough that it's been appropriate to enter. Nasdaq has. Right? But nevertheless, you just got to wait for the corrections. You get the repair out of them. It's how you do it. It's how you conquer the markets. People out there conquering the markets, oh my goodness, with a name like that, for sure they don't know. Come on. There's a reason it's called conquering the markets. It's exactly who we are and what we're doing. But you got to be smart about it. Trade smarter, right? Is that what it says on the YouTube channel? By the way, if you're not subscribed to this channel, make sure you go ahead and subscribe right now. We're going to do it again tomorrow. Have a beautiful day, everyone. And I'll see you all tomorrow. Roman, good to see you, brother. Roman's been here since forever, right? Roman's the original. Look at this. Surfing the waves, eating the tacos, and trading like predators. Roman is CTM all day long. Thanks, Heath. Thanks, everyone. Have a beautiful day. I'll talk to you all tomorrow.